Welcome to Study Session 6, Ethics and Professionalism. Introduction. In this lecture, we shall examine how the concept of ethics and professionalism guide the work of a professional accountant, especially when audit work is involved. Objective. At the end of this lecture, you should be able to describe how the concept of ethics and professionalism affect the practice of auditing. The nature of professional ethics. Ethics can be defined as the moral principles that guide a person's behavior. Ethics can be related to a particular profession such as accounting, medicine, engineering, and so on. Other words that have been used to describe ethics are moral values, morality, rules of conduct, standards, conscience, moral code, and moral philosophy. Ethics, as relates to business, is essentially concerned with how an enterprise carries out its operations in a morally acceptable manner, ensuring that the decisions taken at all times are fair to all the parties involved. These parties, usually referred to as stakeholders, include the shareholders, customers, suppliers, employees, creditors, government, local community, and the society as a whole. Organizations that act ethically will not only provide the environment for its employees to act ethically, but will also succeed in earning for themselves a good reputation. The members of a profession usually endorse a code of ethics governing their professional behavior. They define the area of their technical competence, ensuring from time to time that those who possess the required formal educational qualifications and appropriate practical experience are given the right to practice within the stipulated code of ethics. Professional ethics, or the ethics of any particular profession, regulate the way and manner each member is to relate to other members on the one hand and to the society on the other hand, both from a moral perspective. For example, in one of the auditing standards for professional accountants, the ethical principles which govern auditors' responsibilities are stated to include integrity, objectivity, independence, professional competence and due care, professional behavior, and confidentiality. Sometimes, governments might legislate for improved standards of behavior. Some professions are regulated while others are not. In the case of the regulated professions such as accountancy, banking, law, and medicine, the distinction between statutory and ethical requirements may not be as clear as in the case of the less regulated professions. In the regulated professions, a lot of their ethical requirements have a statutory basis. There are many examples of the statutory basis of the ethical requirements of some of the professions, spanning through the provisions of CAMA, BOFIA, CBN Act, and the Enabling Act of each of the professional bodies, ICANN Act, CIBN Act, and so on. For example, various provisions in both the CBN Act and BOFAI govern the operations of banking business in Nigeria. Provisions of the Insurance Act 2003 stipulate how insurance business should be carried out. The Securities and Exchange Commission (SEC) requires full public disclosure of specific items of accounting information by companies offering their shares for the first time in the Nigerian securities market. The Nigerian Stock Exchange (NSE) regulates items that quoted companies must disclose in published accounts, in addition to those statutorily specified by CAMA. Section 358, subsection 2 of CAMA prohibits any officer or employee of any company or partner or employee of such a person from accepting appointment as auditor of that company. In the conduct of any of the professional duties, an auditor must comply with the ethical guidance issued by his or her professional body. The International Federation of Accountants, IFAC, which is the international body comprising about 150 member organizations from all over the world, representing over 1.5 million professionally qualified accountants, has its own code of ethics for professional accountants. This code is binding on all the IFAC member bodies, and the latter is obliged to ensure that either in the form of their own local code or directly by adopting the IFAC code, their own members are appropriately guided to comply with the IFAC code. In the case of Nigeria, and in the view of the fact that ICAN, the Institute of Chartered Accountants of Nigeria, is the only Nigerian accountancy body recognized by IFAC, there is a code of professional conduct for members issued by ICAN. Fundamental principle and statement. In spite of the fact that misconduct is difficult to define, and the code has subtly warned that ignorance of misconduct or its omission from the list of examples does not absolve any member from sanction, professional accountants are urged to refrain from misconduct. Misconduct is seen as including any act or default which is likely to bring disrepute to him, his fellow accountant, and the profession of accountancy in general. Some general points on ethics and the professional accountant, that is auditor, are stated below. Integrity is vital. Professional independence is very important. Accountants must not only be people of integrity and independence, they must also be seen to be so. And when a professional accountant has ethical difficulties or is uncertain about the course of action to take, he should either seek advice from his professional body or even take legal advice. The ethical standards as contained in the ICAN code are in two categories, namely fundamental principles and statements. Statements. These provide more details on what is expected of members in certain circumstances. They are, for the most part, in the form of principles followed by discussion and illustrations. Most of the statements are relevant to members engaged in practice and also, where appropriate, to employees of practicing firms, but not to other members. Though integrity and objectivity are also mentioned under the statements, there are other ethical standards which are not specified under the fundamental principles but mentioned under the statements only. These are independence and confidentiality. Integrity. This is an important concept that runs through the code of ethics or code of conduct of many professional bodies. Integrity implies not merely being honest, but fair dealing and truthfulness. In addition to honesty, other synonyms for integrity include probity, uprightness, and incorruptibility. You either have integrity or you do not have it. Therefore, an auditor should aim at simply being a person of integrity, rather than seeking to be operating at any acceptable level of integrity. He or she should deal with any situation with all sincerity of purpose, being transparently honest. Objectivity. An auditor's objectivity must be beyond question when conducting an audit. An auditor must always approach his work with integrity and objectivity. Objectivity is essential for any professional person exercising professional judgment. It is equally important for accountants in business as well as those in public practice. It is the state of mind that has regard to all considerations relevant to the task in hand, but no other. It is sometimes described as independence of mind. There is no doubt that the need for objectivity is particularly evident in the case of an auditor whose work entails giving a professional opinion that is likely to affect rights between various parties and the decision they take. It has become clear that there are sometimes instances of threats to objectivity. These threats may arise in relation to the auditor's own person or in relation to a connected person such as a member of his family or a partner or a person who is close to him for reasons of past or present association, obligation, or indebtedness. Threats to objectivity as articulated in ICANN's rules of professional conduct for members include the following: self-interest threat, self-review threat, advocacy threat, familiarity or trust threat, and intimidation threat. The self-interest threat is a threat to the auditor's objectivity stemming from a self-interest conflict. This could arise from a direct or indirect interest in the shares of a client or from a fear of losing a client because of the significance of its fees as part of the firm's income. The self-review threat is the apparent difficulty of maintaining objectivity and conducting what is effectively a self-review if any product or judgment of a previous audit assignment or a non-audit assignment needs to be challenged or re-evaluated in reaching audit conclusions. The advocacy threat occurs when there is an apparent threat to the auditor's objectivity if he becomes an advocate for or against his client's position in any adversarial proceedings or situations. Whenever the auditor takes a strongly proactive stance on the client's behalf, this may appear to be incompatible with the special objectivity that audit requires. Independence. An auditor must always approach his work with objectivity and independence. The approach must be in the spirit of independence of mind, whereby auditors express opinions independent of the entity and its directors. However, it has been observed that it is not always an easy task for the auditor to exercise this independence. There are usually some matters which may threaten or appear to threaten the independence of an auditor. These matters include undue dependence on an audit client. Public perception of independence may be put in jeopardy if the fees from any one client or group of connected clients exceed 15% of gross practice income or 10% in the case of listed or public interest companies. For the case of new practice firms, not more than 25%. Family or other personal relationships. It is desirable to avoid professional relationships where personal relationships exist. Examples of personal relationships include mutual business interest with members of the group comprising the client, the audit firm, officers or employees of the client, partners or members of staff of the audit firm. Acceptance of goods and services. Goods and services should not be accepted by a practice or by anyone closely connected with it unless the value of any benefit is modest. Acceptance of undue hospitality poses a similar threat. A bottle of scotch at Christmas is acceptable, but a weekend in Cape Town or Obudu Cattle Ranch would not be. Actual or threatened litigation. Litigation or threatened litigation, for example, on auditor's negligence between a client company and an audit firm would mean the parties being placed in an adversarial situation which clearly undermines the auditor's objectivity. Influences outside the practice. There is a risk of loss of objectivity due to pressures from associated practices, bankers, solicitors, government, or those introducing business. Provisions of other services. This is acceptable in principle, but care has to be taken. There are various safeguards available to offset the different types of threats enumerated above. Auditors should always consider the use of safeguards and procedures which may negate or reduce threats. Confidentiality. Statement number 3 of ICANN's Rules of Professional Conduct for members is on confidentiality, and it is applicable to all members. It gives guidance on how members should handle confidential information. Information that is confidential to a client or employer and acquired in the course of professional work should not be disclosed by a member except where consent has been obtained from the client, employer, or other proper source, or where there is a legal right or duty to disclose. In the latter case, the client or employer should first be notified before disclosure is made. It is possible for a member to be in doubt as to whether he or she has a right or duty to disclose information. Under such a circumstance, he or she should take legal advice or consult the institute for advice. A member who has acquired or received confidential information in the course of his or her professional work should neither use nor appear to use that information for his or her personal advantage or for the advantage of a third party. A member should not deal in the shares of a company with which he has a professional association at such a time or in such a manner as to make it seem that he was turning to his advantage information obtained by him in his professional capacity. Most importantly, it should be noted that it may be a criminal offense in certain circumstances to use confidential information for an improper purpose. More examples. There are laid down ethical standards covering the following professional responsibilities. Advertisements. Advertisements should be legal, decent, clear, honest, and truthful. Promotional materials should not make disparaging references to or disparaging comparisons with the services of others. There shall be no harassment of a prospective client, no cold calling, that is, unsolicited contact through phone or personal visit, or a non-client with a view of obtaining professional work from him. Succession arrangement. This is covered in Statement 4 of the ICANN Code captioned Changes in Professional Appointment. The incoming auditor should contact his predecessor for information as to his nomination and appointment. If the client does not give his consent for the existing auditor to discuss the client's affairs with the proposed successor, the existing auditor should report that fact to the prospective auditor, who should not accept nomination or appointment. The existing auditor should respond promptly to communication from the prospective auditor. When the incoming auditor or advisor asks his predecessor for information as to the client's affairs, lack of which might prejudice the client's interests, such information should be promptly given. There should be no charge for providing such information unless there is a good reason to the contrary, such as significant amount of work having been involved. Rejection of engagement. Ethical or professional reasons for rejecting engagement includes situations where the auditor is related to an officer or related office of the enterprise, where the auditor has financial involvement with the client's business, where the assignment will lead to conflict of interest, where the audit fee is to be agreed upon after the completion of the audit, where the audit fee chargeable will constitute a significant proportion of the total annual audit fee, where the auditor's independence is not guaranteed, where the auditor is related to an officer of the proposed client's enterprise, where the auditor's appointment was not named by the shareholders during the AGM, particularly address appointed by the directors. Unethical behavior. A general description of unethical behavior includes the following: any act or behavior which is not in consonance with the professional code of conduct, behaving in ways outside the moral principles or ethics which govern a certain profession, any act that does not follow the norms of a profession, a behavior that negates the code of conduct guiding an operation, an attitude that is not in consonance with the accepted norms, a conduct that is morally adjudged wrong, unbecoming, and below expectation, behavior that is not based on moral principles, deviation from standard and known norms, and an act that is not normally right. The above list shows clearly that in each case, there has been an attempt to see unethical behavior as the opposite of ethical behavior. The major attributes of unethical behavior refer to failure to comply with the expected normal moral standards of a profession. It is simply a professional misconduct. Consequences of unethical behavior. The consequences of failure to comply with the ethical standards of a profession can be clearly identified from the code of conduct or code of ethics of that profession. Using the ethical code of the accountancy profession as an illustration here, the section on enforcement of ethical standards states as follows: the power of the Institute to enforce ethical standards is by the ICANN Act conferred on the Accountants Disciplinary Tribunal, which is in respect of this power independent of the Council. The investigating panel considers complaints against the conduct of members and is empowered to initiate disciplinary action by referring appropriate cases to the Disciplinary Tribunal for adjudication. Where a complaint is received by the Institute alleging a case of misconduct against a member, such a member shall be requested by the investigating panel to furnish his defense or reaction to the complaint within 14 days of the receipt of the request to do so, if the member is resident within Lagos State, or 21 days if the member is resident outside Lagos State. If the member fails to respond within the specified time, a first reminder shall be sent to him requesting him to send his defense or reaction within 7 days from the receipt of the reminder. If the member fails to respond again, a second reminder shall be sent to him requesting him to resend his defense or reaction within 7 days ultimatum, within which to reply, and a warning that non-response shall amount to contempt of the institute and is sanctionable by the disciplinary tribunal. If the member fails to respond after the second reminder, a formal charge of contempt shall be preferred against the member before the disciplinary tribunal. The above procedure shall apply to any other requirement or directive of the panel to a member, so much so that failure or neglect by the member to abide by the requirement or directive shall also be treated as contempt by the institute and could be sanctionable by the disciplinary tribunal. If, having considered the fact before it and any representation made by the member, the panel is of the opinion that in all the circumstances those facts amount to misconduct, and is of the further opinion that disciplinary proceedings should be brought, it will prefer a formal complaint to the disciplinary tribunal. Alternatively, the panel, if it considers that the case does not call for the most serious sanctions, may make certain orders against him in cases which give rise to or include questions of public concern. The panel may alternatively refer the matter to the disciplinary tribunal. It is the disciplinary tribunal which alone can determine, subject to the right of appeal referred to below, whether a complaint of misconduct is proved. Where a complaint is against the conduct of a firm having more than one partner, the complaint shall be deemed to have been made against each and every member who was a partner in the said firm at the material time for the purposes of this statement. From the accountant's disciplinary tribunal, a member has a right of appeal to the Court of Appeal. Any failure to show the guidance in the fundamental principles or in the statements may also be taken into account by the committee of the institute responsible for regulating work of members and members' firms. The accountant's disciplinary tribunal has powers equivalent to those of a high court, and that is why any appeal against its verdict goes to the Court of Appeal and thereafter to the Supreme Court. Consequently, the normal rules of evidence are applicable. All complaints should be in writing, while any accusation against any member should be substantiated with documentary evidence. Sanctions which are commonly imposed by the Institute for misconduct include the following: reprimand, payment of costs, fine, withdrawal of practicing rights, suspension from membership for a period of time, and expulsion from membership. Summary.